Hello and welcome again to Stocks Advisor channel. And today we'll talk about Clene Incorporated, traded at Nasdaq, ticker name CLNN. Well, usually we don't do analysis of these kind of stocks because it's a market capitalization only 40.7 millions with although the price is after today trading about 13.59, but technically this is not by the price but by the market capitalization, a penny stock you can say. And in general, why is it very interesting? Because you can see here on the bigger scale, it was trading quite stably in the region of 10 plus minus. And now what is happening after some news, it was experiencing enormous volatility from almost 18 upwards, downwards, to the levels of about 650 below. And then this volatility was quite persistent. And actually last week we see again growing from 10 to 1750 plus. So today we had enormously big dark candle with a lot of volatility. Of course, the question is now what's next? How to trade here safely? Well, to understand this, let's quickly just look at the levels. First of all, for these kind of trades, you need to see the confidence trade level. And this is the level where the price usually crosses upwards, downwards. And if you look at these levels, this is between actually a little bit lower, 862, and at the higher part, 1317. What does it mean? It means that anything in the vicinity of 862 would be quite safe buy with the hope to sell at higher levels in the vicinity of 1317. And most possible shape that we can observe here is kind of a V shape or cup and handle kind of formation. So that would be the most safe approach. If it works, it works. If not, it's better not to engage because market capitalization is very small, so volatilities could be enormous here. And thinking and hoping that it will be a V shape, the most safe approach without, let's say, taking into account possibility that tomorrow will be enormous growth higher, which is still possible, but this would be pure casino style. So again, expecting the V shape, the best way to trade and the safest level to trade will be, of course, here. Just buy anything below the current shadow. Let's magnify a little bit the current shadow and all the way actually to the previous level. So within today's low and yesterday's opening. So this would be therefore between 1084 and 1247. Yes, enormously big levels, of course, but volatilities are expected also to be quite big. So this would be the level where you can buy first quite slowly. So let's make our call out here. This would be 1084 and 1247. So the first level to buy through, purely technical, just volatility right as I call it. But if you do it safely, also possible. Why not if you like this style of trading? And of course, then if the price goes lower, as I said, the very principal level of 862 will form for us the higher part of the level where we can start buying, and the lower one will be formed here. Also, it's taken into account volatilities of January and being lower here, which is about 698, and the top being actually 862. So this will form for us the secondary technical level where we and just kind of do the volatility right. So let's write it down for ourselves again as a call out. So a little bit, so we have a shift of the scales. Okay, let's bring it back. And then the second level would be, as I said, 698 to 862. So again, let's write it here. Again, very big levels, but also volatilities are expected to be quite big. So these are quite safe two levels, of course, you can buy through. And that's actually it. You don't really need to look further anything, but still we will, because it's a small market capitalization, could be just ridiculously enormous. So we will keep still some funds to buy lower than this lowest level observed for the company, which will be about 621. So anything below 621, we just keep some small funds to buy through. You can say it's quite insane. Yes, it is indeed. As I said, we usually do not trade and discuss this, and actually this is just because people asked it in numbers, and just to give you an example that using this approach you can trade even on these very let's say volatile levels, but then you should be extremely careful. And now how to trade here? Well, still here it will be the classical 5 portions play, meaning that the money you would like to play here you can split in 5 portions. Then if this is going to happen, you can start buying slowly with 1 portion in the first level. If you go to the second level, you start buying with 2 portions there, and if there is anything bad coming, we go lower than 621, you can buy with another 2 portions there, with the remaining 2 portions. And what does it mean to buy with the portion through the level? It means that you don't need to buy immediately at the opening, you need to start buying slowly. So you need to subsplit every portion to another maybe 2-3 portions and buy slowly through the level. This way, let's say your average price in the level will be around the middle of it, so once the rebound takes place you will be able to make the most profit. And here, just because it's a volatility right play, it's advised to take the profit anywhere from 15 to 20%. Don't be too greedy, really take it once you can, and don't wait too long, because waiting too long, especially on this type of volatility rights, could make the position expire, and then you will actually start losing. So this will be profit taking note. Re-enter if needed, but sell in time. And yeah, good luck with this one. If you like this way of trading where you don't need to look at stop loss or 15-minute candles, just look at the very principal levels. Don't forget to subscribe to our channel, press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.